Banking over the northeast wind, sailing on summer breeze, skipping over the ocean like a stone. I'm going where the weather suits my clothes. Banking over the northeast wind, sailing on summer breeze, skipping over the ocean like a stone. Hey, Jill, how are you today? This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Mesh, how are you doing today? Where I invest in dividend stocks for weekly cash flow, take you along for the ride. What's in the cup tonight? This, I forget what this is. It's supposed to be some nutritional drink to make me look younger. I don't know. A lot of herbs, spices, what? No, not herbs, spices. What do they call it? Vitamins, minerals, all that kind of weird stuff. That's that one. But I also have my ginger tea. Helps me from coughing and soothes the throat. Alrighty, let's get started. Let's get rolling. Before I get inundated with a whole bunch of different questions, let's go through, what do they call those? Some disclaimers. We haven't done disclaimers in a while. First and foremost, I am not a professional or anything. People might say I'm a professional pain in the ass, but you know what it is? It is what it is. That being said, I have no formal education. I have what's called the road less traveled, okay? Real world experience. I'm not a college graduate. I did not go to college. I do not have a freaking thing behind my name except for SR. All right, Rich. Rich is here. How you doing? So that being said, I'm not a financial advisor. I'm not a broker. I'm freaking nothing. Absolutely nothing. I'm the guy down the street with the weird car that people trying to figure out what the hell I'm up to. Okay, nothing extravagant about me whatsoever. However, 15 years ago, when my daughter was 9 years old, she jumped off my lap and said, "Daddy, can you teach me to do what you're doing?" Because I was trading back then, because I owned a manufacturing company, and they were throwing so much damn money at me, I couldn't figure out what the hell to do with it all. So I took a lot of it and I started doing investing. I got houses, I bought cars, I bought artwork, I bought this, I bought that. Everything seemed to fizzle out and swirly down, except for the stock market. Get it simple, and you can do it anywhere. What car is it? Now, weird are we talking? Well, I have a 2000 Dodge Caravan, not Caravan, 1500 conversion van. So I drive around in a conversion van. I bought it for $500 about 8 years ago, and it still runs and drives. I drive back and forth from Maine to Florida, Maine, bang, bang, at least 6 times. Okay, Jupoopy. That's a weird ass name, Jupoopy. Yeah, Rivian is not 20 years old, dude. Evan Studio, it's Saturday. It is. Isn't that weird? Not a whole heck of a lot happens on Saturday. Not much. If you still don't know what to do with your money, I wouldn't mind some. See, people always say that, but Betch coin will make millionaires. Alrighty. Which is better, AT&T or Verizon for long-term investment? Okay, Pat Wiley, you're under the misinterpretation, because whatever you think I do, I really don't. Okay? If you think about it, right, my long-term investment is 30 days. Okay? I jump in, make my profit, I get out. Okay? I spend about 15 to 20 minutes a day on my retirement portfolio. Okay? Now, most people spend more time on planning a family barbecue or a weekend out than they do on their personal finances or their retirement. At some point in time, You are going to retire. Means your money is going to have to work for you in order for you to live comfortably in your golden years. I'm pretty good. I'm in my golden years at age 60. I feel pretty good about this. Sweetie Swag, thank you for that. So here's the thing. If you are going to retire at some point in time, if you don't take care of your money and you're relying on someone else to do it for you, then you're going to be, let's say, SOL. We all know what that means. Shit out of luck. Okay? Because if you give your money to a hedge fund manager or a money manager or a financial advisor, yeah, they're going to give you a 4% draw because that's what the powers that be want you to have, a 4% draw. So a 4% draw, what do you need on a monthly basis? Now, all of us here are over the age of 18, so we all should know off the top of our heads, don't think that you don't know this because you probably do, what are our monthly requirements? What's our mortgage? What's our rent? What's our insurance? What's our electric? What's our cable? What's our phone bill? What's our groceries? What is your monthly bill? And if you know what that is, well, you're better off than a lot of people. Most people don't know that number. So if you know what you need on a monthly basis to live comfortably, well, great. That's part of the equation. Now you got to figure out what trading strategy are you going to use to help balance out what you have available to what you need on a monthly basis. So if you're doing the 4% rule, okay, 4% rule, $1 million is going to give you $40,000 a year. So if you need $80,000 a year, or I don't even know what that is. What is $80,000? Was that $1,500 a month, $1,500 a week, something like that? Okay, you're going to need a fat chunk of change in order to do $80,000 a year. You're going to need $2 million. Okay, that's a lot. Now for me, $80,000 a year, it's only $160,000 because I get 1% a week. 1% a week is $1,600 a week. That multiplied out gets you the $80,000 a year. Well, it's a lot easier to get $160,000 than it is to get $2 million. I mean, just do the math. It's a simple math project, you know? Because you know if you work a 40-hour-a-week job and you make $1,000 a week, or you take home $1,000, you take home $2,000, you know the math. If you're doing 40 hours and you're getting this, okay? If you want to have a different lifestyle, you need to do this plus more. Okay, so you got to figure out where is your money coming from. How are you going to invest it? Where is the best place to put it? Does this make sense to you? Is this too much effort? Do you want something else? Okay, it's a whole bunch of different questions. And as soon as you figure out, okay, how much do I need every month? What trading strategy can I get there simply, safely, predictably? Uh-oh. Live access removed. Dividend stock stream 16 at 9:05 p.m. Your access to go live and multi-guest will be restored November 19th. Your access to mobile gaming will be restored November 19th. Violations, fraud, and scams. We want people to be able to use the platform to learn ways to be financially responsible and consider economic transactions. Oh, do you agree with this? No. What the fuck is that? Notice is unclear. I'm still not sure why I got restricted. Select up to 3 reasons. Okay, there's one. My live does not contain any content mentioned in this notice. TikTok should allow content like mine. I can't do 4 of them. Would you believe I just got kicked off again? I just got kicked off. Yeah. Apparently, somebody doesn't know how to add. Well, that just freaking sucks, doesn't it? Okay, so let's do it this way. All right. All right, so You guys over here and here and here and here, we're going to try this a little bit differently. Okay, so apparently I pissed somebody off again because somebody doesn't know how to add. If I make 1% per week, that comes to over 50% per year. There's no fraud in that whatsoever. I actually show you the exact same trades that I do every single day. So how could that possibly be fraud? This just freaking drives me nuts. Okay, so I show something that people want to see, but other people don't want me to share. Well, what the hell is that all about? Where the hell is free speech? Okay, fraud, scam, no, doesn't apply to me. Okay, I'm not asking anyone for anything. I'm not telling anyone to do anything. I'm just showing what I do. Okay, how does that possibly be a scam or a fraud? I don't know. Let's try doing this another way. So you guys over here on Instagram and you guys over here on YouTube and those of you on Twitter, you get the floor. You get to decide what we're going to share tonight, and we're going to go from there. All right, that being said, let's jump in and take a look at some of the stocks that I have on my list. This way, we can go a lot quicker and get things done. All right, first and foremost, we're going to be looking at COP, which is ConocoPhillips. ConocoPhillips, here we go. We don't want to see all of that. We want to go right down to here. Now, first thing I always want to see when I look at any stock is I want to see where the high is. The high for the year. Where's the low? Where was it a year ago? Where is it now? Where is it moving? Well, went up, down, now it's going sideways. We're currently at 112.32. 112.32, well, that comes to, what would that say, 113.70? So the 114.72 cents, not quite making that cut. Okay, even at the 112s or the 113s, it's still not quite making it. So ConocoPhillips is going to be a no for this coming week because the numbers just don't work. I like 1% a week. Simple, safe, predictable, consistent, 1% per week. So, no to ConocoPhillips. GLW. What is GLW? Let's say a quick gander. GLW. Is that Corning? Yes, it is. It's Corning. All right, quickly, Corning. Here we go. This is what I always want to see. I want to see a high. I want to see a low. Where was it? Where is it? What direction is it going? Simple enough. She goes all the way up, hits 51, pulls back. Now we're at 46. Okay, so if I'm going to buy it on Monday, the 46.50 is going to be 60 cents a share. Now, 60 cents a share is over 1%. So if I buy this stock at the current price, first thing Monday morning, sell it to someone else for the exact same price I paid for it, $46.50, I can collect 60 cents a share. Now, 60 cents a share on a $45 stock is over 1%. So let's see what it looks like. First, before we do that, a year ago, we're at 28.42. The bottom for the year is 27.57. From there, she shoots up nicely. Here's the high right here on the 29th of October. See it right behind me? Now, the high was 51.03. From there, we got 4 days to the downside. So we're sitting at 46.49. However, I would like to find the new 30-day bottom before jumping in. So let's take a look at the actual 30 days. Here's the actual 30 days. So 30 days ago was the 30-day bottom, shoots up the 30-day top. Now we're coming back down after a high right here. So what usually happens there? Well, we got your profit taken from the high, profit taking, bounces back up, profit taking again, comes down, gets to a certain level, and people say, you know what? It's low enough. Let me get rid of it. Let me jump into something else. Now, take a look at seasonality. Now, if you guys don't know what seasonality, you're going to be in for a treat. Here we go. Now, what we're looking at here on this chart here, see the blue line, see the red line? All right, way over to the left is January 1st. Over to the right, December 31st. This is the whole year. Now, the whole premise behind this screen is to show you how a stock moves predictably every single year, year after year after year. Well, the red line represents 10 years worth of data. That's 2014, 2015, 2016, 2017, so on and so forth. The blue line represents the movement for this year. So this is what the stock has done this year. Okay, up, side, pull back, back up. Now she's pulling back again. But look at the seasonality. She basically just goes sideways for this time of year. TikTok not working? No, TikTok is working just fine. Apparently they think I'm scamming people and I'm lying to people. So they said, you know, my content is fraudistic. I like that word, fraudistic. So they think I'm fraud. It is what it is. You can't argue with them, so I'm not going to bother. But I will talk to my agent and find out. Came from TikTok. Sweetie Swag, how are you today? Well, thank you for all the flowers you sent me. That was very nice of you. Thanks. DVA, how are you doing over here? I see you came over here too. Yeah. Now, I can't figure out Facebook, but Instagram's working, Twitter's working, YouTube, both YouTube channels are working. So, TikTok, we're just shooting out videos and dumping them off. Since it kicked me off. Okay. Anyway, so that's the seasonality for Corning. Now, most people know who Corning is. They make that, you know, that glassware, that stemware. Tucker Scott, Edward Jones doesn't like you talk of profits. That could be true. Because especially when you think of it this way, most people don't get over 20%. Most, they don't. They get the average. What is the average? The average is 8 to 10% per year on a good year. Okay, I'm showing people a way to get up to 50% per year with a simple, safe, predictable, consistent 1% per week. I issued what you said since. Okay, that works. So that being said, let's keep on rolling. So as much as I like Corning, all right, and I do like Corning, it's on my list. TikTok kicked you off. What stocks did you pick? We're going to go over those right now. Sorry for the typos. Hey, don't worry about it. Let's go back to the standard chart. Now, I like Corning except for the last 4 days. Okay, she was a nice run for the whole month. Okay, hit the high, pulled back, running up nicely. But the last 4 days, she's pulling back. That means people are taking their profits. As soon as she gets to a certain level, it will most likely turn around, go back up. That's when we'll like to jump into it. So I'm going to write Corning down for next week. GLW, because it looked pretty good there. Okay, so next on the list is going to be Alcoa, Alcoa. All right, here we go. Alcoa, the high of the year was just a couple of weeks ago. The bottom of the year was way back last December. I sold my first, let's see this. I sold my first contract based on what you have been teaching, ready for my next stock to sell. Cool bean. All right, Sweetie Swag, I hope you do a good job. Do you have any questions? Drop me your phone number. I will give you a call. All right, so let's look at Alcoa. Okay. A year ago, Alcoa was at 26.53, bottomed out in the middle of December at 23.95. Shoots up, pulls back, shoots up, hits the high. Here's the high for the year right here on the 7th, which was 2 weeks ago. Actually, last week. It was last Thursday. Just after the election, this thing shoots up nicely. Okay, 30 days ago, we opened up at 40.65, bottomed out on the 31st of October. From there, shoots up to the high, 46.55, drops back down. We've got 4 days of profit taking, turns around, going back up again. It might get some more of this right here. It might, but I doubt it because you got a big gap here and a huge spike with volume. A huge volume spike tells you a lot of people are jumping in. Now, are they jumping in being buyers or are they jumping in being sellers? I really don't know. Okay? That being said, let's take a look at the numbers and what Alcoa is going to offer. Okay, currently at this moment in time, $45. The $45 strike price is going for 73 cents per share. That's close to 2% for the week. So we're going to check that out. We'll be right back on the next video. You've got to be shitting. Now I can't even upload that video. Ah, you've got to be kidding. What I hate more than anything was people telling me what I can and cannot do. Okay? Telling me something that's just not true, expecting me to believe it, and expecting me to be okay with it. I'm not okay with it. Okay? Nothing I'm saying is a lie. Nothing I'm saying is fraudulent. If people would just pick up a damn freaking calculator and do the numbers themselves and take a look at what I'm and listen to what I'm saying, okay? I hate that shit. Doc, what's happening over there? Doc, you see that? I got booted off again. Apparently, someone doesn't want me teaching what I'm teaching. If that's not the case, then it must be something I'm saying. Mahesh, how are you doing? Do we consider RSI or MACD indicators when buying stocks? No, Mahesh, I don't. Okay, what I'm looking for basically simply, I don't like to make things complicated. I'm looking for the high of the year. I'm looking for the low of the year. Okay, I'm looking at the high of the 30-day period. I'm looking at the low of the 30-day period. I'm looking at what the other buyers and other sellers are doing. Okay, as you can see, 30 days ago, he's here. Okay, she goes up, pulls back, goes up, pulls back, goes up. Well, you can see the blue lines in the background. That's the volume. You have your average volume right down here. Okay, you have your above average volume here, here, and here. Look at the movements. A lot of movement there, a lot of movement here, and this. Not a lot of movement, but look at the volume. Well, what happened on Friday? Why did it do that on Friday? Anyway, all that being said, does Alcoa make a good trade for this week? Well, let's take a look at the seasonality, because seasonality will give us an idea of how the stock reacts year after year after year. So let's check it out. All right, over here to the seasonality chart. Okay, so the seasonality chart basically gives us an idea of what the stock normally does year after year after year. That's why we have it. So we're going to compare last year to the year before, to the year before, to the year before, to the year before. 10 years worth of data, this is what that red line represents. Well, over the last 10 years, she kind of goes sideways, up, down, and ends up on a high note at the end of the year. Well, we're getting close to the end of the year. What do we got, 6, 7 weeks left to go? All right. Well, let's continue. So that looked pretty interesting. Let's see what the numbers look like. Let's get out of here. Let's go to a covered call right there. Now, the stock is currently trading platform. David, this is Think or Swim trading platform. All right, so currently the stock is at $45. All right, so if I buy it first thing Monday morning, I'm going to pay $45 a share. Now, a covered call allows me to sell it to someone else for a certain price by a certain date. I like the weekly options. Well, currently the stock's at 45. If I buy it at 45, if I sell it at 45, I can collect a nice premium. Let's see what it looks like. So I'm going to find the 45 right there. I'm going to collect that. I'm going to go to just one contract. That way you guys don't freak out about the big numbers, because I like buying 1,000 shares at a time. But here we go. Here's what it should sound like. You should write it down. If not, these are recorded on YouTube. You can go back and watch the videos over and over and over again if it makes sense to you, and you can get the ideas of how things work. So the screen here behind me is live on YouTube. You can go in and watch it to see all the little, the little intricacies and be able to read the small print. Anyway, by one covered call AA100s, those are the weeklies. 22 November 24. That is next Friday. If I buy it on Monday at the $45 ask price, and I sell it to someone else using a covered call for $45, it makes no sense whatsoever. I'm buying it for $45. I'm selling it for $45. What am I collecting? What is your other YouTube channel? Sweetie Swag, this one you're on right now, okay, that's me standing in front of the screen. Okay, if you go to the10minutetrader.com on YouTube, look at my lives. I have 2 lives going right now. One, me standing in front of the screen, and one, me up in the top left-hand corner of the screen. which gives you the whole screen, makes it easier for you to see the numbers. As I was saying, if I'm buying it at $45 and I'm selling it at $45, what am I making off of this? I'm making what's called the premium. The premium is selling a contract to someone, giving them the right, not the obligation, to buy it from me at a certain price by a certain date. That's called a covered call. It's a simple, safe, predictable strategy. I know exactly what I'm getting before I even do the trade. Here's what it sounds like. Buy one covered call, AA, that's Alcoa. 100, those are the weeklies. 22 November 24, that's this coming Friday. The $45 call against AA, the stock, at the market price. Now, my break even, here's the break even price right here. The break even price is $43.56. So anything over $43.56 is going to be a profit. But remember, never buy a stock unless you're okay with owning that stock. Because you just might have to buy it and it just might go down and you might hold it longer than you want. Me, I want to hold it for 5 days, 10 max, but it doesn't always work that way. Sometimes I have to hold it longer. The longest I've ever held any stock is 9 months. Didn't lose any money. And Emmy, what is the difference between a put and a call? Ooh, a call is an opportunity. A put is an obligation. Okay, so if you sell a put, you are obligated to buy it at a certain price. Of course, unless you roll it forward, you can push that obligation to another week. But a call option is the right but not the obligation. The put is obligatory, which means you have to do something or you're forcing to do something. So if you buy a put, you're forcing someone to buy it from you at a certain price by a certain day. If you sell a put, you are agreeing to be obligated to buy that at a certain price by a certain date. Where call options totally different. It means you can do it, you don't have to. Okay, the right, not the obligation. Okay, I don't teach puts here. I have a morning trading group where people join me every morning, Monday, Tuesday, Wednesday, Thursday. We do our trades. Friday afternoon at 2 o'clock. Now, we used to be 3 o'clock, but there's a lot of us there, so now we have to be at 2 o'clock, so we have enough time for everybody to take a look at their position, so everybody has a good feel for the position that they're in, not being too risky and trying not to lose any money. That's the object. Simple, safe, predictable, consistent, and we're going to try to throw that one in, no way to lose. Okay, are there people of all levels in those classes? Absolutely. We have beginners that are still paper trading. Now, paper trading is kind of like playing Monopoly. Okay, you make your trades and you see how they work out, but it's not real money. So it allows you to practice before you put real money in. Now, I've been trading for over 20 years. I still have a paper trading account, because I'm always coming up with new, interesting trading strategies that I want to test out. So I test them out in a paper trading account and see if it works. And if it does work consistently, then I'll throw some real money in it. I don't put any real money in it until I'm really sure it's going to work. All right, that being said, back to this. The profit on this one contract is $144. One contract, $144. What is that costing me? It's costing me $4,356. Well, let's bring up the calculator to see how much that comes out to. So if my profit is $144, I'm going to divide it by what's it costing me to do the trade. 4,356. Well, that comes to a grand total of 3.3%. Now, if I'm getting 3.3% every single week, that's well over 150% per year. But I'm not allowed to say that, because some people think addition and subtraction is not right. But if I'm getting 3.3% on this particular trade, and I do a trade similar to this every single week, that's over 3% per week. 3% a week, 52 weeks. Let's figure it out. Multiply that by 52, comes to a grand total of 172%. 172% per year on a trade like this. Now, but the big question is, do I like this company? Well, this company is Alcoa. They've been around for a very long, long time. They have increased their dividends to their shareholders consistently. That's what I'm looking for. How about you? That's a good video. So let's pop up that video. And what I hate more than anything is people telling me what I can and can't. Yeah. All right, you guys are going to have to bear with me because I'm shooting these videos because TikTok pissed me off again, threw me up because they think I'm trying to scam people. I don't know what it is. I hate it when people try to tell me what to do. Period. I should put exclamation points there, shouldn't I? All right, so let's upload this one. And apparently, I can't do anything on my other TikTok account because they won't let me shoot any videos. Freaking wieners. All right, let's send that one off. All right, let's do another one while that one is working. All right, so that one's uploading. We're going to do another one. Let's get out of here. Let's get here. Let's get out of there. Let's go back to this. Go over to here. You can't get there from here. Alrighty, so you wave to Diva. How you doing? Araspa, how are you doing today? Now, you guys, I'll never be relying on you guys at YouTube, you guys on Instagram, and you guys on wait a minute, Twitter to hit me up with questions because I can't take questions on TikTok. Apparently, they don't like what I have to say. All right, so that's Alcoa. Let's look Chevron. CVX. CVX. All right, see if I can do this one. Andrew, hi James. Do you ever sell calls 2 weeks out if numbers are better in current coming price? Example for Kohl's. Absolutely, Andrew. We're going to take a look at Kohl's next after we do this one. I'm going to shoot a quick video on this one and see if we go from there. All right, so that's Chevron. Let's see if it works. Estee Lauder. Emmy, we'll take a look at Estee Lauder. I actually own some Estee Lauder. All right, I'm going to take a quick look at Chevron. Now, follow me along, see if this makes sense to you. Chevron, high of the year was 167.50. That was back in April. Bottom of the year is down here in September at 135. A year ago, we were at 142. She shoots up, pulls back, shoots up again. We are now currently at a 30-day high. That is usually going to be a no. But let's keep on keeping on and show you the seasonality. What does this stock normally do this time of year? For that, we look at the seasonality chart. That is January 1st all the way up to the left, all the way up to the right is December 31st. This is how the stock reacts throughout the year. The blue line is this year's movement. Okay, down, up, blah, blah, blah. Here we are right here. This is Friday's date. Now, the red line represents 10 years worth of data. That's 2014, 2015, 2016, 17, 18, 19, 20, so on and so forth. 10 years of data. Now, this time of year, right here we are right here, the last couple weeks of November, just going sideways, no big upward movements, no big downward movements. Okay, great. What does it look like for a trade? Well, currently at 161.98. The closest one will be the 162, and it's only going for 63 cents a share. Okay, we can all do this all at the same time in unison. Are you ready? 1, 2, 3. Hell no. Okay, if it's not giving me 1%, don't want anything to do with it. Now, I like Chevron. Some weeks it gives me 1%, some weeks it doesn't. That being said, we're going to say no to Chevron, and we're going to move on to the next one. All right, I'm going to save that. All right, I'm going to take a quick look. I'm going to save that into my drafts. Cool, I can save it into drafts. So, I can't do 10-minute videos. I have to do short videos and go from there. All right, no to Chevron. Intel, ooh. Okay, let's get out of here. INTC. All right. All right, we just finished up with Chevron. Now we're going to look at Intel, INTC. Very first thing I always want to see is the chart. Where is the high of the year? It looks like that was back in December. From now, I want to look at the low of the year, back in August, late August. Okay, a year ago, we're at 42.50. Now we're at 24.35. What is the movement? How has it moved throughout the year? She went up, she went down, sideways, down, sideways, pulled up. Here we are right now, 24.35. What does it normally do? For that, we're going to need the seasonality chart. I try to go through this as quick as possible because this is really not that difficult. When I say the 10-minute trader, I mean 10 minutes. Seasonality, here we go. The blue line represents the movement this year. The red line represents movement for the past 10 years. January 1st is way to the right. December 31st is over here to the left. Wait a minute. Okay. To the right, to the left. To the left, to the right. Either way. Way over here is January 1st. Way over here is December 31st. Look at the movement on over the last 10 years. Basically sideways, but look at the fourth quarter. The fourth quarter, she has a tendency to go up. Great. That's what I'm looking for. Well, number one, it is Intel. I know who they are. I know what they do. You'll see if you watch me over and over again that I only buy stocks that you probably heard of. I don't do weird stuff. I don't do something you say, what do they do? Who are they? No. Intel. You know who Intel is. Intel's been around for a very long period of time. Okay, at this moment in time, the purchase price is $24.45, the closest strike price, because I sell stock options against stocks that I buy. It's called a covered call. It is a simple, safe, predictable strategy. So if the current price is $24.45, the closest strike price is going to be $24.50, and I can collect 53 cents per share. Well, 53 cents per share on a $24.50 stock, that's over 2%. If you can collect 2% every single week, is seasonality typically skewed by significant events like COVID? Sometimes yes, sometimes no, but you're taking 10 years worth of data. Okay, that's all of 2014, all of 2015, 2016, 2017, 2018. So if you have 1 year that's skewed, it has a tendency to mess things up. It does. Let's get back to what I'm talking about. So, as I was saying, Intel currently is offering 2% for a covered call this upcoming week. So, first thing Monday morning, if I buy it at $24.45, sell it to someone else at $24.50, I'm going to collect 53 cents a share. Let's take a look and see what it looks like and actually see the numbers. Now, if you don't know, this video, now I'm going to be repeating this over and over and over again because I got to do short videos, because I got kicked off my live, because some freaking idiot can't count and thinks these numbers aren't real. Okay? 2% a week is over 100% a year. 1% a week is over 50% per year. Okay? I'm not saying you can do it. I'm telling you this is what I do. Okay? If you want to copy what I do, hey, that's on you. I always tell people I have no formal education. I have no licenses whatsoever other than a license to drive. Okay? If you want to take a look at what I'm doing and then you copy what I'm doing, that's up to you. I always tell people, review your own shit. Make sure it makes sense. You are an adult. Make sure that you are responsible for your own decisions. All right? Well, let's get back to this. Now, I'm reading you the numbers from Charles Schwab trading account. Okay, this is Think or Swim. These are actual real numbers. Okay, the ask price as of Monday morning should be $24.45. If I buy at $24.45, sell my rights away at $24.50, I can collect more than 2%. Let's see what it looks like. Okay, changing this to, it says covered stock, to 24.50s right there. Now I'm just going to do one contract so you get an idea of what one contract looks like. So if you have the ability to do 5, 10, 15, 500 contracts, that's totally up to you. Okay, I always go by percentages, not total dollar figures. I'm not going to tell you, hey, I make $20,000 a week and you can too. No, I say you should be able to do 1% per week if you listened to the strategy that I created for my 9-year-old daughter. Now, That's what the trade looks like. Here's what it sounds like. Buy one covered call Intel INTC 100s. That lets you know that it's the weekly. Okay? 22 November 24. That's this coming Friday. The $24.50 call option against the stock to open. Two orders. We're doing two orders at once. We're buying the stock, we're selling the option at the exact same time. Why? Well, because the profits are linked together. I buy the stock, I sell the option at the exact same time. I know exactly what I'm making, and that is right here. $63 per contract. Okay? What does the stock have to do? Well, it's got to stay where it is. It's got to stay above 24.50. Well, what if it doesn't stay above 24.50? What if it drops down? That's why I always tell people, never buy a stock unless you're okay with owning it. Because most of the time, it will go down. The rest of the time, it will go up. Once in a while, it will go nowhere. Stocks only move three directions: up, down, and nowhere. Okay? Never buy something unless you're okay with owning it. That being said, $63 is the profit on this contract. So we're going to take the $63 and we're going to divide it by what is it costing me to do this trade. Well, this trade is going to be $2,387. Okay, 2,387, and that comes to a grand total of 2.6%. 2.6% per week. Well, hell, let's multiply it by 52 because there's 52 weeks in a year. That's 137%. And it's Intel. Do you like Intel? Never buy something unless you know what it is. All right, I'm going to quit this video now, and we're going to go over to the next stock. Okay, guys, hang tight. We're doing one video, one at a time. Damn it! It won't let me do it. Shit. Fucking, I hate that shit. And that was a good trade, too. It was. So let's go do it again and record it on another TikTok account. See, I knew I have two accounts, okay? This one here, which is Dividend Stock Talk. The other account is The 10-Minute Trader. And for some strange reason, a couple of months ago, I think, you know what? I'm getting flagged every once in a while because somebody doesn't know how to add or pissing someone off. So I'm going to need a second account just in case that I can be live on two accounts. So when one gets kicked off, we have the other one. So if you guys get a chance, it is The 10-Minute Trader. Okay? This account is Dividend Stock Talk, brought to you by The 10-Minute Trader. So I only have two accounts here on TikTok. Okay, the second one over there doesn't have enough numbers on it yet, so we're going to need to work on that. So we're going to do Intel one more time because it was such a good trade. I don't want people to miss out. So let's do it again, but we're going to do it a lot quicker so that we can breeze through it faster. So if we can get the video under 2 or 3 minutes, that way I can get it posted. All right? Let's try this again. Sorry, you guys. Hey everyone, this is James from Dividend Stock Talk. We are taking a look at Intel INTC. Now, I got booted earlier tonight about a video because apparently somebody doesn't know how to add. Somebody thinks I'm scamming people and they just don't want me to let you know what it is I am doing because it is simple, it is safe, it is predictable, it is consistent, 1% per week. That's over 52% per year if you do it properly. I have no control over what you do, but I do have control over the information that I deliver to you. Number one, I want to take a look at the chart. Now, this chart, you can find it anywhere. The high of the year, the low of the year, where it was, where it is, and the direction it's going. First 5 things I want to see. Intel, back in December, it was on 51. A year ago, it was 42.50. She shoots up, she drops down. The low of the year is 18. Shoots up. We're currently at 24. Look at the up, down, sideways, down, sideways, down, sideways, and up. Right now we're at 24.35. If I'm going to buy it first thing Monday morning, I'm going to be paying 24.45. Last trade 24.35. The bid 24.41. The ask 24.45. The high, low, close, open. That will fill in on Monday. But If I'm buying at 24.45, I sell my rights away through what is called a covered call, a simple, safe, predictable strategy. It's one of the safest strategies there is. The 24.50 is paying 53 cents a share. Let's take a look at the numbers and see what it looks like. But before we do, let's take a look at the seasonality. What does this stock normally do this time of year? Well, this time of year, if you don't know, all the way over to this side is January 1st, all the way over here is December 31st. The blue line represents the movement for this year. Okay, we're right here right now, second week of November. The red line represents the movement for a whole year. Now, the fourth quarter starts right here, but look at the movement in the fourth quarter. Definitely going to the upside. I love it. 1 year looks good, 30-day looks good, and now the seasonality looks good. Let's take a look at the actual numbers. So I'm going to change this to a covered stock. I'm going to jump into the 24.50 right there. I'm going to do just one contract so you guys get a good idea what the numbers look like. And here was what it sounds like. Buy one covered call of Intel 100s. Those are the weeklies. 22 November 24. That's next Friday. The $24.50 call strike against Intel to open. That's 2 trades in one swoop. 2 for 1. Woohoo! I'm buying the stock, selling the option together. The profit is locked together. Doing it at the open, first thing Monday morning. Now, my profit for this one contract is $63. What is it costing me? It's costing me $2,387. Let's bring up that calculator and see what that comes to. Calculator, here we go. 63 bucks. That's my profit, and I want to divide it by what am I outlaying? 2,387 comes to a grand total of 2.6% for 1 week. The big question is, do I understand this? Does this make sense? Do I like Intel? And do I like Intel at this current price? Well, I do. I'm definitely going to do this trade. I can't tell you to do it. I'm not telling you to do it. I'm telling you the numbers I'm looking at, the numbers I'm reading, great. If you like them, if you agree with them, do your research. Make sure it makes sense to you before you do anything else. That being said, I'm going to post this video. There we go. So, let's see if it worked. And it does. Yay! Draft. Let's do another one. Okay, so I got to keep the under 4 minutes. I could do that. Get out of there. Let's get out of there. Let's get out of here. Let's swing this back over this way. Let's get out of there. All right, that being said, what do we have next? Intel, I like that one. VLO, Valero, VLO. Ooh, nice, nice. 140, 141, nice, cool beans. All right, let's do it. Okay, Eraspi, last night we looked at Marathon. Premiums were 7%, but looks like they don't have dividends. You're absolutely right about that. There are a few stocks that we do regardless of the dividends or not. That's just one of them. Now, some of the companies are on Warren Buffett's list, and there are other traders that I actually like, and I watch what they're doing. That's why we're looking at Marathon. Hopefully that answers your question. And I'm going to shoot a video on Marathon next. Okay, we're going to do Estee Lauder, and then we're going to do Marathon. All right. Here we go. Hey, everyone. This is James from Dividend Stock Talk. We are going to take a look at VLO, Valero Energy. First and foremost, everything I always want to do is one step at a time. First thing I want to see is where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? What's the direction? Up, down, up. Cool, simple, easy. A year ago, we're at 120. We topped off at 185. We dropped back down to 125 before settling up at 140. That's where we are at this moment in time. Okay, look at the last 30 days. 30 days ago, here's Johnny. 136 drops down to 127, shoots up to 140. Now that's a little on the high side, but let's keep on going because if we back up a little bit, okay, look where the high of the year is. The high of the year is way up here. Well, we're way down here. That's a lot of room to keep going if you're looking at it that way. I like looking at the 30 days, gives me a better idea. But let's take a look this way. Now, seasonality. What does it normally do this time of year? For that, we use the seasonality chart, and that gives us the whole year. Way over here, January 1st, way over here, December 31st. The blue line represents the movement this year, okay? Up, down, now she's going up, okay? The red line represents 10 years worth of data. Look at the last 2 months of the year. Flat, just going nowhere. Love it for calls, spreads, and some other interesting option strategies. That being said, let's get out of there and let's see what we can do. The current price at this moment in time, 140.70. If I buy it first thing Monday morning at 140.70, I'm going to sell my rights at 140. And let's see what that looks like. Okay, I'm selling it for less than I paid for it. Well, what does that mean? Okay, if I take the 70 cents out of here, that brings me 120. That's less than 1%. No, I don't want to do that. I'm going to sell the 140 ones and pick up 154. That's over 1%. Yeah, the stock's got to go up 30 cents, but I like Valero Energy. Never buy something you don't like, you don't understand, or you don't want to hold on to. It just doesn't make sense. Never buy something you don't understand. All right, that being said, the 141s, there we go. Now, I just want to do one contract. No, that's not right. I'm going to go to covered stock first. The 141s, there we go. Now I want to do just one contract so you guys get an idea of what one contract looks like. Okay? By one covered VLO 100, that is the weekly. Okay? They expire every Friday. 22 November 24, that is this coming Friday. The 141 call strike against the VLO option at this price to open. It means I'm buying the stock and I'm selling the option at the exact same time because the profits are locked in, and I'm making on this one contract $254 for one contract. Well, let's pull up a calculator, see what that looks like. Clear that. 254 is the profit. See, maximum profit on this trade. Now, I like to buy a stock. I want simple, safe, predictable, and consistent. It's already in there. I already know what I'm making. It's already predictable. I already know what it's going to be. So $254 is the profit I'm going to be making. How much is it going to cost me? $13,840. Divided by 13,846 to give me a total return of 1.8% for the week. There are some stocks out there, there are some funds out there, there are some ETFs that don't even pay 1.8%. This is 1.8 for the week. When I say, okay, anyway, if you like it, first and foremost, do you like the company? Do you know who they are? Do you know what they do? Are you comfortable with buying it and owning it? I'm not telling you to do anything. I'm just giving you the numbers, showing you what is possible when you look and you play outside the sandbox. That being said, let's save this one and go to the next one. Fuck, it wouldn't let me do that one either. Shit. So, let's see if we do it again. All right. All right, I'm going to see if I can get it under 3 minutes. Okay, so apparently, someone, I pissed off someone at TikTok. They're not letting me do these, all right. Good evening, everyone. This is James from Dividend Stock Talk. I'm going to talk really fast because someone's getting pissed off because I'm sharing information they don't want me to share. Here we go. VLO, Valero Energy. Ask yourself a question. Do you like this company? Here's the high of the year. Here's the low of the year. Here's where it was. Here's where it is. Look at the movement. Up, down, back up again. Currently sitting at 140. Okay, a year ago we're at 120. The bottom of the year is 120. Top of the year is 185. She dropped down to 125, back up to 140. That's where we are at this moment in time. Last 30 days, because I like to see what a stock is doing. Check it out. 30 days ago, 136 goes up, pulls back, hits 127 at the bottom, shoots up, hits a high at 143. What does that mean? Well, nice movement to the upside. Can it keep that momentum? Don't know. Look at the high of the year. The high of the year is 183.91. It's almost 184. But look where we are. That's a lot of room for growth right there. Can it hit it? Maybe, maybe not. Well, let's jump on over to the seasonality chart to give us an idea what the stock normally does this time. What the stock does normally this time of year. The blue line represents this year. Okay, the red line represents 10 years worth of data. January 1st all the way over here, December 31st. This is the whole year. So this is the average movement right there. So usually this time of year, she just keeps on going straight, and that is a good thing. So let's take a look at what the stock actually looks like if I'm going to do a covered call. The reason why I want to do a covered call is simple, safe, predictable, and consistent. That's what I'm looking for. That being said, currently the price is at 140.70. We're going to look at the 141s. Click on that. We're going to do just one contract to give you an idea what it looks like. Now, here's what it sounds like. Buy one covered call Valero, VLO, 22 November 24. That is the 1 week option. That means I'm buying it first thing Monday morning. I'm selling somebody the rights to buy it from me at a certain price by a certain date. That certain price is 141. The date, it is 22 November 24. That is this Friday. So if I buy it on Monday, I sell somebody the rights through what is called a covered call. It means they have the right to buy it from me, but they don't have to if they don't want to, at 141. So if I'm buying it at 140.70, selling it at 141, I get an extra 30 cents there to get also along with that premium. That, my friend, comes to $254 for the contract. $254. That's the profit. What is it costing me? I'm going to divide that by the purchase price. $13,846. That gives me a grand total of 1.8% for the week. 1.8% for the week. What does that come to for the year? Well, we'll multiply that by 52. Gives me a grand total of 95% for the year. Based on those numbers. Numbers don't lie. That's what it is. If I buy the stock at the current price, if I sell at the money, covered call, I can pick up 1.8% for the week on Valero Energy. Always, always, always ask yourself the question, do I like Valero Energy? Do I want to hold on to Valero Energy? Does this make sense? If it makes sense, you guys, see you on the next video. Fuck! Won't let me do that one either. Just pissing me off. It is. Come on, you guys, I'm relying on you guys because I don't have TikTok anymore tonight. So I'm relying on you on YouTube. I'm relying on you on Instagram. I'm relying on you on Twitter. If you have any questions about the strategy, it's a simple strategy. I created it for my 9-year-old. Simple, safe, predictable, consistent. No way to lose because a 9-year-old loses, she's going to cry. I'm going to feel like crap. Mama gets involved. I'm sleeping on the couch. It's a whole ordeal. So the strategy was created. Never buy something you don't understand. That's number one. Number two, never sell at a loss. Number three, make sure the company is consistently profitable. Number four, make sure it has weekly options. Can we do something to help? Rich, I honestly don't know. Okay? I have an agent who's supposed to help me out in these situations. I'm going to have to contact the agent and see what they say. That being said, let's keep on keeping on. All right. I'm going to record on the other TikTok channel. Now, the other TikTok channel doesn't have the same reach because it's newer. All right, next one. All right, get out of that one. Back to single, and back to here, and back to here. Okay, so we're gonna do a couple of videos. Somebody wanted to take a look at Estee Lauder. Estee Lauder, here we go. All right, we're gonna record on the other channel, see how that works. Good evening, everyone. This is James from Dividend Stock Talk, coming to you from St. Petersburg. Estee Lauder, E-L, Estee Lauder. Take a look. First thing I always want to see, where's the high of the year? 160. Where's the low of the year? 60. Where was it a year ago? 120. Where is it now? 63.75. What is the movement? She went up, she went down. She went up, she went down, up, down. Now she dropped, big drop here last month, and now she's going a little bit to the side where it's 63.75. I actually have some of this. Let's take a look at the numbers. Is it going to be a candidate for a covered call? Now, a covered call is where you buy the stock, you sell the option against it. The option allows somebody else to buy it from you at a certain price by a certain date. I get to collect the premium because I own the stock, I'm selling the option. Now, 80% of all options expire worthless, so I don't want to buy options, I want to sell them. All right, so 64.85 is the current price at this moment in time. The closest strike price should be 65, and that's going for 85 cents a share. Right off the top of my head, I know 85 cents per share is is more than 1%. That's what I'm looking for, a simple, safe, predictable 1% per week. 1% per week is over 50% per year. Apparently, somebody doesn't like that information and is trying to block me from sharing that information. So let's see how it works. Before we do that, let's take a look at seasonality. Now, for those of you unfamiliar with seasonality, basically, if you take a look at the chart behind me, all the way over to this side is January 1st, all the way over here, December 31st. This is how the stock reacts throughout the year normally. The blue line is this year. She dropped, she went up, she dropped, she went up, she dropped. This is where we are right now, this blue dot. The red line represents the movement over the last 10 years. Well, take a look right here. This line here is going to the upside. Let's zoom into it so you get a better look. Okay, you cannot mistake that for anything else. Okay, nice upward trend right up until the end of December. Well, that works for me. All right, let's go back to the regular chart. Let's look at the last 30 days to get us a good idea how the stock is moving. All right, 30 days ago was a 30-day high at 94. She drops down, goes sideways a bit at 87.50, then has a big drop, keeps on going. The 30-day bottom was Tuesday. Wednesday was higher, Thursday was higher, Friday was higher. 3 days to the upside. I like 2 days to the upside, but 3, hey, that works even better. So let's get out of there. Let's do a covered call right there. And now the closest strike price. Now, if you understand a strike price, that is what am I selling the stock price? What am I selling the stock for? If I'm buying it here, 64.85, and I'm selling it at 65, that's more than I paid for it. Well, what kind of premium am I collecting? All right, so let's go here. Let's go to just one contract to give you an idea what the numbers sound like. All right, here we go. Buy one covered Estee Lauder 100s. Those are the weeklies. 22 November 24. That's this coming Friday coming up. The $65 call, which gives somebody else the right to buy it from me at 65 anytime between when I sell this option and Friday afternoon, the 22nd of November. All right? 63.30 to limit order to open to open. That means I'm buying and selling the stock at the exact same time. Reason for that is I want to know what I'm going to make ahead of time. When I say simple, safe, predictable means I know what I'm getting, and consistent. I know what I'm getting before I even do it. Okay, the profit on this one is $170 a share. It's costing me $6,300. Let's do some quick math. Do you ever set a price, strike price at the same, get the premium? Yes, I do, all the time. Calculator. Okay, if the profit on this one contract is going to be $170, let's clear this, $170. How much is it costing me? It says right here, the cost of the trade including commission, $6,330. $6,330. That gives me a rate of return for 1 week, 2.6%. 2.6% for 1 week. Well, there's 52 weeks in a year. So 52 weeks in a year comes to a grand total of 140% for the year with Estee Lauder. Okay? Number one question you should be asking yourself is, does this make sense? Second question is, can I picture myself doing it? Because you're going to be thinking a totally different way. You're not going to be thinking annual returns. You're going to be thinking weekly returns. Because my bills come due every month. Well, I want to get paid weekly. That's what I'm doing. I want to get paid weekly. So, does it make sense? Number one. Number two, can I picture myself doing it? Number three, do I like this company? Okay. Number four, do I like this company at this price? Number five, if I like this company at this price and it goes down, am I willing to hold on to it long enough for it to recover so I don't lose any money? Remember rule number 2? Never sell at a loss. It defeats the purpose. It does. Rule number 1, never buy something you don't understand. Rule number 2, make sure you never sell at a loss. Rule number 3, consistently profitable. Rule number 4, weekly options are a must. And rule number 5, make sure the numbers work. Well, the numbers sure work on this one. Okay? 2.68%. Yeah, that works nicely. I'm going to save this video and we're going to go to another one.
Good evening, everyone. This
All
is
right.
James from Dividend Stock Talk coming
Next. Save it in draft. Save the draft. Good. Now we're going to do another video. What one did we say? Marathon. Yeah. Yeah, buddy. I like me some marathon. Let's see if we can do a marathon on this account. That ought to be fun. It reminds me of that song that a hillbilly sang a while ago. Piss me off. Fucking jerk. Get on my nerves. Hell, I've been lifting now and right. Come on, you fucking dummy. Get your right step right. Get off stage, you goddamn goof. You know. Piss me off. Fucking jerk. Get on my nerves. Well, here comes Johnny with his pecker in his hand. He's a wild ball man. He's off to the rodeo. All right. Marathon. Let's do marathon. M-A-R-A. Marathon. All right, so we're going to see if we can do in less than 3 minutes on this account. Here we go. Good evening, everyone. We're going to take a look at Marathon. Marathon, M-A-R-A. First thing I want to see is where's the high of the year, 34. Where's the low of the year, 9. What is it at now, 2107. She shoots up, pulls back, shoots up, pulls back, shoots up. Now she's pulling back. Let's check the numbers. First, before we do that, what does this stock normally do this time of year? For that, we need the seasonality chart. The seasonality chart, ooh, look at this. Here, where we are right here, look at this movement. Now, this thing is going to go to the upside right up until just before Christmas, and then she's going to tank. That means I got 1, 2, 3, 4, 5 weeks to play with this before I want to get the hell out. So let's check the numbers. First and foremost, the stock is currently at 21.19. The closest one is going to be the 20. That's going for $1.47. That's a whole bunch of money. So let's take a look at a current call and see what that looks like. Okay, the 21, there it is, on just one contract, so we don't get people panicking. market order, and here's Johnny. Buy one covered call Mara 100s. Those are the weeklies. 22 November 24. That's this coming Friday. The 21 call against the stock to open. $132 is the profit on this trade. Okay, right there, 132. What is it costing me? Get my calculator out. Come on, calculator. Clear 132 divided by, here, the cost of the trade plus commissions, 1,968. I don't really remember that very much, but I was around 1968. Ooh, that's when they first came out with the Mustang, the production model. 6.7%. How the hell can that be right? 6.7. Yep, I'm going to be doing this one come Monday. Now, I'm not telling you to do it. I'm just saying that I'm doing it. I'm showing you what I do. I'm not condoning this kind of behavior to anybody. All right? If you like it, fine. Does it make sense? Great. What's the consequences? Well, the stock could drop to the bottom. It could. The earth could open up and swallow the whole marathon and take it with them down to the abyss, and you get nothing. That's what could happen. I'm doing it for a week. I'm buying it on Monday, hopefully be out on Friday. That being said, this is James, Dividend Stock Talk. That was Marathon. Can I save it? Can I? Can I? Can I?
Good evening, everyone.
Next, yes, it actually worked. I'm going to save it to draft. And we're going to do another one. As long as I keep it under 3 minutes. All right. So, if I do a video under 3 minutes, they're happy with that. Still kiss my ass, what I think. All right, delete that. Let's go over here. Now, I want to move over to DJT because, you know, they don't have any restrictions on language or what I'm sharing. Okay, if someone gets pissed off, well, too bad for them. Now, Twitter, for some strange reason, I'm not getting very much interaction with Twitter. I don't know why. Let's figure it out. But apparently, Facebook and Facebook and TikTok are monitoring what I say. Well, I'm not saying anything bad. I'm just showing people that there are other ways to invest other than the powers that be. All right, that being said, that was Estee Lauder. That was Marathon. Come on, you guys, dig deep. Who's going to give me something to look at right now, right here, right now? Come on. A bunch of people sitting here. What are we looking at? We are looked at Marathon. Okay, good. No, fine. I'll pick something. VLO, we looked, ooh, Kohl's. Let's take a look at Kohl's. All right, Kohl's, KSS. KSS. Now, this is going to be fun. Walgreens, Sweetie Swag, WBA. We'll look at that one next. WBA. So, this TikTok account, I got to keep it under 3 minutes. This one over here, 10 minutes. Not a big deal. So I'm going to do both of them at the exact same time. This ought to be fun. Here's Johnny. Here we go. Good afternoon, everyone. This is James from Dividend Stock Talk. We are about to take a look at a covered call opportunity with Kohl's, KSS. First thing I always want to look at is my high of the year. Right here, $29.75. That was back in March. The bottom of the year, just recently, a couple weeks ago, around $17.50. A year ago, we're at 25. We shoot up, pull back all the way to here. Now we're sitting at 1804. Great. What can I do at 1804? Well, 1804, the 18s are going for 52 cents. That's more than 2%. But here's the thing. Do you like Kohl's? Does buying Kohl's make sense to you? Well, let's look at the last 30 days. Okay? Here's what happened 30 days ago. We're at 1950. We shot up to 2150, dropped all the way down to 1750. Now we're sitting at 18. She goes up, she goes down, now she's going back up again. Does that make sense? Before you answer, let's take a look at the seasonality. The seasonality gives us an idea of how this stock moves every single year. The blue line is the movement for this year. All the way to this side is January 1st. All the way over here, December 31st. It gives us the whole year. So the red line represents the movement for the year. Well, here we are right here at the end of the last 2 weeks of November. So from there to the end of the year, she might go basically sideways with a very slight tilt to the downside. I like calls. I actually own some calls. So let's take a look at a covered call on calls for this week. First thing I want to do is change this over to covered calls. The stock is currently at 1804. The 18s are going for 1753. Let's do just one contract. Now, if I'm going too fast for you, this is being recorded on YouTube. So you can rewind it and watch it over and over again, zoom in and take a look at everything. So, by one covered call of Kohl's, KSS 100s, those are the weeklies. 22 November 24, the $18 call against the Kohl's option, Kohl's stock. So I'm buying the stock. Ah, damn it, this one's not working. Oh, hate that shit. The profit on this one is $52.50. Bring this out. $52.50 is my profit for one contract. Well, what is one contract going to cost me? Well, it's going to cost me $1,748. Well, that's 3%. All right, so I'm writing down Kohl's and Marathon for next week because the numbers are just cool. That being said, let's keep on looking. So, number one question you should always ask yourself is, does this make sense? Number two, can you picture yourself doing this? Number three, do you like Kohl's? Number four, do you like Kohl's at this price? Number five, are you okay with holding on to Kohl's if it goes down? Because that's a chance you take. Anytime you buy something, there's a risk. It's going to go up, it's going to go down, or it's going to go absolutely nowhere. And you have to be okay with that before you buy anything. Now, I do covered calls every single week. So if the stock goes up, don't really care. Stock goes sideways, don't really care. The stock goes down, as long as I like the stock, I don't really care. It's a good quality company. They're consistently paying out dividends. They're consistently increasing their dividends. And they're in a point of the chart, because I like to know, where is it going to go? What does it normally do? So let's go back to here. All right. Now, here's where we are right now. Okay, stock goes up, stock comes down. Stock goes up, stock comes down. Stock goes up, now it's in the uptrend. That's all they do. They go up, they go down. They do not come to your house, make you breakfast in bed, tuck you in, walk your dog, trim the trees, mow the lawn. They don't do any of that crap. They go up, they go down. That's all they do. They go up, they come down after, profit taking, and then stock drops, gets to a certain point down here where people like me saying, holy crap, Kohl's at this price? Yeah, I'm going to buy some. Well, I am. I'm going to buy some at 18, because if I can make over 2% for the week on Kohl's, I don't see Kohl's folding anytime soon, at least not in the 5 or 10 days that I plan on holding it. Okay, I plan on owning it and holding it for as little as possible, week to 2 weeks to 3 weeks. The longest I've ever held anything this year is 5 months. Okay, and that was Wynn Resorts, WYNN. But the interesting thing, I held it for 5 months. I caught 2 dividends and about 15 premiums. That means a check every single week from my positions. Well, they don't teach you that. Okay, money managers and investment advisors, they don't teach you this kind of stuff. Okay, they say, you give me your money and we'll give you a 4% draw every year, or you can rely on Social Security. Yeah, no thanks, that doesn't work for me. I'm looking for a simple, safe, predictable, consistent 1% per week. All right, so we're at 10:30. We've got 1 more hour to go. Let's see how many more we can go through. Okay, WBA. WBA is going to be next. We haven't done that one yet. Walgreens. All right, save that video.
Good afternoon, everyone. This is James from Dividend Stock Talk. We are about to
Save it to drafts. Okay. And we are going to do I Can Too. How are you? I Can Too. All right, so we're going to do another one over here. We're going to wait for this one to load up. And there you have it right there. All right, so let's see if we can do Walgreens. WBA. All righty. Let's see, one more time. Sweetie Swag, you want to look at AT&T? I'm going to let you know right now, AT&T, the premiums just aren't that great, but we'll take a look at it. Let's see if we can do this again. All righty, we are taking a look at Walgreens, WBA. Walgreens has been in business for over 170 years. I don't think they're going anywhere anytime soon. The high of the year is 127, drops all the way down to 8. A year ago, we're at 21, shoots up, pulls back, goes sideways. We're currently sitting at 848. Great. What does that look like? Well, seasonally, what does this normally do? Okay, seasonality is one whole year. January 1st, way over here, all the way over here, December 31st. The blue line represents the movement this year. Look at it, it's going down, now it's going sideways. Okay, I don't mind. But look at the red line. The red line represents 10 years of data. Okay, that's 2014, 15, 16, 17, 18, so on and so forth. Basically, here we are right here. Look at this in the fourth quarter. She's going to the upside. I love to the upside. It works for me, especially with covered calls and spreads. Currently, the stock is sitting at 852. So if I buy it first thing Monday morning at 852, I sell some of the rights to buy it from me at 8. Okay, oops, I want to go to covered call. There we go. 850, there we go. I want to do just one contract so you don't freak you guys out with the numbers at the market. Here we go. And here's what it sounds like. Buy one covered call WBA. That's Walgreens 100. That is the weeklies. 22 November 24. That is this coming Friday. $8.50 call strike against the stock price. Well, right now the stock is at 852. If I'm buying at 852 and I'm selling it at 850, I'm losing 2 cents. Not a big deal. But what is this giving me? Well, it's only giving me $9.50 per contract. So one contract, I'm profiting $9.50. $9.50 divided by $841 for one contract. $841. That gives me a total return of 1.1%. Well, that's over 1%. 1% a week, every single week, is over 50% per year. Why would you give your money to someone else? Because most money managers and money market investment bankers, whatever, they offer you a 4% draw on your money. Why would you do a 4% draw when you can get 1% per week? If you do it right, simple, safe, predictable, consistent, make sure the numbers all work. Okay, I gotta stop this one because they don't like me going over 3 minutes. Did that work? And it didn't. Damn it. Some strange reason they're just not liking me today. All right, that being said, let's try another one. AT&T. Sweetie Swag wants to take a look at AT&T. Delete that. Let's get out of this. Go over here. Get out of that. Back to standard. Let's move it back over to here. Let's put AT&T right there. All right. AT&T is going to be a big fat no, kiddo. Sorry. It's at the high of the year. The numbers just ain't going to work. 2270 to 2250 is going for 35. The 23 is going for 12. Not going to work, kiddo. Numbers just don't work for AT&T. But kind of interest you in some JD. Ooh, JD. No. All right, wait a second. Maybe. Okay, so. Okay, like the premiums, cool. 35, 35. Ooh, nice. All right, so we're going to do JD real quick. All right, so let's see if we can do this again for JD. 2 videos. Let's see which one works and which one doesn't. That being said, let's take a look at this. Now, you do realize TikTok is not working okay, but YouTube is, because it's going live to YouTube, which means people over on YouTube are going to see all of this fun stuff. Anyway, let's go take a look at JD.com Incorporated. All right, we're taking a look at JD. See what kind of stock this is. See if it is ripe for a covered call strategy for this upcoming week. At this moment in time, here is our high, 48. Here is our bottom, 21. A year ago, we're at 26. We dropped down to 21, shoot up to 34, back down to 24, back up to 48. Now we're sitting at 35. Okay, so we're at 35. What does this stock normally do? Well, for that, we use the seasonality chart. This is what the company usually does. Okay, all the way over here is January 1st, all the way over here, December 31st. The blue line represents the movement this year. Okay, right there is where we are right now. The red line is 10 years worth of information. 2014, 2015, 2016, 2017, so on and so forth. 10 years worth of data. Right here is where we are. What is this thing going to do for the next couple of weeks? It's going to be a big fat no. Look at that, because she is going into a downturn. So that doesn't work for me. For me, I like everything in my favor. Number one, I want to sell an option. I do not want to buy it. Reason being, 20% of options actually expire worth, have some value to them. 80% of all options expire worth less. So why do I want to buy? I don't. I want to be a seller. In order to be a seller, I got to buy the stock first, then sell somebody the option to buy it from me at a certain price by a certain date. That is called a covered call. It's a simple, safe, predictable, and consistent strategy. Very easy to do. Okay? But JD does not make it for me this year. Well, actually, for the rest of the year. As you can see, here's the high here at 48. She's in a little bit of a downturn for the past couple of weeks. Well, it's exactly what the seasonality tells me. The seasonality tells me this time of year, the fourth quarter, she goes down. So it's going to be a hard no for JD. Sorry, this time. Next time I look at JD will probably be in the first quarter, sometime in January. So until then, JD, we're going to have to put you on the shelf saying maybe later. Pause both of those.
All right, we're taking a look at JD.
Next. Save the draft. Cool, I did both of those. Okay, so let's go back here. Let's go back to there. Let's go back here. Let's go back to there. And we're ready to roll to the next one. JD is a no. No to JD. Ooh, Altria. Altria is M-O. M-O. No. Marvel. M-R-V-L. No. Wells Fargo. W-F-C. W-F-C. No. International Paper IP. Maybe. Sideways and then up. No, I don't like it. Too close to the high. So no to International Paper. Mosaic. M-O-S. Let's try that again. M-O-S. The Mosaic Company. Ooh, that's a definite yes. Look at that one. Okay, 2676 to 27s. Wait a second. 2650s. Yeah, because the last trade was 2638. Okay, so the 2650s. Alrighty, let's do this. Mosaic. The Mosaic Company. Here's Johnny. Mosaic Company, M-O-S. First thing I always want to see with every stock I take a look at, the high of the year, 38. Bottom of the year, 24. A year ago, we're right around 37. Goes sideways for a bit, drops. Goes sideways for a bit, drops. Goes sideways for a bit, drops. Goes sideways for a bit. Now we're at 26.38. Now, what does the last 30 days look like, just in case we like this one? So the last 30 days gives us a good idea of where it's going to go next week. I want to be in, I want to be out in 5 days. Perfect world, in, out 5 days. 30 days ago, 25.60. The high, 29.50. Bottom, 25. 1, 2, 3 days the upside. I love 3 days the upside. I look for 2 days, but this one is 3. Now, what does it normally do this time of year? Well, for that, we look at the seasonality chart. Now look at the seasonality chart here. Okay, blue line represents this year. If you didn't know, seasonality, January 1st way over here, December 31st over here. It looks at the whole year. How does a stock perform every year? Well, the blue line is this year. The red line is 10-year average movement. So last couple of weeks right here, this is where we are. Look at that nice upward move that we have coming on right about now. See that? Nice move to the upside right up until the end of the year. So that's going to be a yes for me. Currently, we're at 26.76, but the last trade was 26.38. So I'm going to do the 26.50s. All right, I want to do a covered stock because it's simple, it's safe, it's easy, it's predictable. Just one contract. What does one contract look like? At the market price, at the opening of the day. Here's Johnny. You ready? Buy one covered call Mosaic, MOS 100s. Those are the weeklies. That means I'm buying it on Monday. I'd like to be out on Friday because that's when the option expires. 22 November 24, that's this coming Friday. The $26.50 call strike against the stock at the market to open. Well, my profit here is going to be $55.50 per contract. Okay, right there. Maximum profit, $55.50. Remember I said simple, safe, predictable. I want to know what I'm going to make before I even jump in. Get my calculator out. 55.50. And I'm going to divide it by what is the cost of the trade, including the commissions. $25.95, $2,595, and it's going to give me a grand total of 2.1% for the week. 2.1% for the week over a year. That's 52 weeks in a year. That's over 50%. That's over 100% per year. Fuck nuggets. If I go over 3 minutes, it doesn't work. So I got to keep all my videos below 3 minutes on this account. What the fuck are they doing? All right. That being said, we're at 10:30. I don't want to do this all night long because it's driving me nuts. I hate when people tell me what I can and can't do. It just pisses me off. Especially because I believe I didn't do anything wrong, you know? It's like I'm giving you actual good information. Wish somebody taught me this when I was, 20s, 30s. I don't know. Would I have paid attention? That's an interesting question. Would I have paid attention to myself 30 or 40 years ago? I don't know. Imagine that. If you can go back in time, talk to your younger self. Dude, this is you 30 years ago. 30 years in the future telling you, right? Yeah, I don't know. What would I do? Interesting question. All right, let's get out of there. I'm getting disheartened, and I don't like that, but I think they're doing it on purpose. go back to standard. There we go. Alrighty. So that was Mosaic. Mosaic looked interesting. MOS. I like that. I even circled it. All right, we got 1, 2, 3, 4, 5, 6, 7, 8 more to go. Because I already did Alcoa. General Motors. General Motors, I think, is going to be a no because she's on a, yeah, she's just coming down off of a high. So here's your high right here. She's starting to pull back, get all this profit taken down here. Yeah, no thanks. I don't like buying at the high of the year. General Motors probably is not going to look good for at least 2 weeks. GM, right there, right next to Kinder Morgan. So General Motors is a no. QCOM is next. I'm going through these 8 or 10 stocks, and that's going to be it. QCOM, wasn't that? Yeah, that's at a bottom. That's going to be a no. Dell, D-E-L-L. Waiting for a bottom on Dell. That's a no. American Airlines. Definite no. It's at the high of the year. Ford. That's going to be a no. Verizon. VZ. That looks good. There we go. Verizon. Looks good there. 41.64, the 41.50s. Okay, the 42s, not quite there, but the 41.50s. I take out 14 cents off of there. That's 38. Fuck, that ain't gonna do it. Applied Materials. AMAT. Hell no. IBM's last on the list. This better be a good one. Again, another no. All right, that being said, I've ran out of my list of stocks that I found over the past couple of weeks. Nothing really looks good anymore for the rest of this week. Let's take a look at next week's list, just for the fun of it. We got time to kill. It's only 11:15. MU, Micron. Nope. Kinder Morgan, KMI. Nope. PNC Bank, PNC Bank. Nope. Dollar General. Maybe. Yeah, Dollar General. 76.15, the 76s. Ooh, nice. All right. Dollar General it is. Let's take a look at it. All righty. Let's see if we can do this again. It's got to be under 3 minutes. If it's not under 3 minutes, I can't post on this one. And that's going to piss me off. Take a deep breath. Let's do this. You ready? Dollar General, DG. Let's take a quick look at it. Here's the high, 170. Here's the low, 75. A year ago, we're at 120. She shoots up, pulls back, big drop, gone sideways. We're sitting at 75.88. We can currently buy it at 76. The 76 is going for 159. That is more than 2%. More than 2% a week is over 100% per year. Let's take a look at the seasonality. What does this stock normally do this time of year? Oh, look at that. Nice to the upside. It goes up and then flat. Awesome. I love it for covered call or a spread. But we're doing covered calls. Let's move this over here. Jump over here to the covered call, and we're looking at the 76. 76 is right there. Let's do just one contract. There it is. At the market, at the opening of the day. Here's Johnny. Here's what it sounds like. Buy one covered call, Dollar General, 100. Those are the weeklies. 22 November 24th. That's this coming Friday. 76 call strike against the stock at the market. Okay, that being said, 76 call strike at the market. Okay, it's going to give me a $173 profit for this one particular trade. Well, great. Let's bring up my calculator. $173 profit. I'm going to divide it by The cost of trade including commission, 7,427. 7,427. That gives me a grand total of 2.3%. 2.3% per week is over 100% per year. Okay, people don't want to know you, don't want you to have this kind of information. This is the second time within a month that I got shut down because apparently I'm sharing something they don't want you to know. So I've definitely got to move from TikTok over to the other stations where there is no big brother watching over me telling me what I can and cannot say. That being said, I do like Dollar General. There's 5 questions you got to ask yourself. Number 1, does it make sense? Number 2, does it make sense to you? Can you see yourself buying this stock? Number 3, do you like Dollar General? Number 4, do you like Dollar General at this price? Number 5, are you willing to hold on to Dollar General in case it drops? Because that's the risk you're going to take. You're going to buy a stock, it's going to go down. It always happens that way. But if you like Dollar General and you're okay with buying it and owning it, I'm not telling you to do this, this is what I'm going to do. I'm going to buy it Monday at the current market price. I'm going to sell somebody the option to buy it from me with a covered call, the exact same price I paid for it, and I collect the premium. And at this moment in time, the premium is 2.3% for 1 week. If I get 2.3% every single week, that's over 100% per year. That being said, this is James from Dividend Stock Talk. I am out of here. And it worked. Cool beans. Alrighty, you guys, I am going to quit for the day because I went through my whole list. I'm a little fed up with this kind of nonsense. That being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a simple, safe, predictable, consistent 1% per week. I hope people on YouTube have more respect for the kind of information. And that being said, we'll catch you again tomorrow, even though I'm not quite sure what I'm going to do about TikTok. Catch you guys later.